Everyone, I'm Mark Rutstein with the Evan and Mark team right here at Compass, and today we have Lou Patierno from McLean Mortgage. Hello, Lou.
Hello, Mark.
Lou, I think you did my first loan. I think it was before I got in real estate.
I think you were a bartender back then.
I think I was bartending at JR's, and it was probably 2000 or 2001, maybe somewhere around there. Maybe it was earlier. I don't know. We're both old at this point. Welcome,
Rick.
Yes, yeah. Exactly. Tell me a little bit about yourself, Lou. I already know everything about you, but tell the kids.
I'll send the kids.
How long you been doing it?
Mark, I've been doing this since 1996. So that's 2 centuries. I started in originating loans in 1996 in Washington. I've lived in DC since 1985, and I have been originating loans in the district in Maryland and Virginia for that entire time.
Wow, that's a long time.
A long time.
I think I was in high school.
I've been doing it so long that I do the children of people I first did loans for.
Don't you hate that? You tell someone a date and they go, I think I was still in high school then. And you're like, punch.
Yeah.
Hey, let's start. I know we have some topics. We have 3 topics that we wanted to cover. But first, I just wanted to touch on rates real quick because I've seen rates in the news the last couple of days. And I've gotten some emails saying, oh my gosh, the sky's falling. The rates are going up. So can you give me a little tidbit about what's going on with that right now?
Well, rates go up and down. And right now they're going up. And, for people who maybe were out of the market for the last few months over the winter break, they might see their rates maybe went from 4 to 4 1/4, or maybe even touching 4 1/2 sometimes. But, it's not the end of the world. Rates are still really low. And in the big picture, is it going to prevent people from buying a home? No. Is it going to knock people out of being pre-qualified? No. But it's a little bit higher. A little bit higher.
All right. Still lower than our parents and their parents too, right?
It's still lower. I just want to put rates in perspective. Back when in the last big boom that we had from 2004 to 2006, rates were around 5.5% to 6.5% during that period. So, in my career, I've written loans with rates as low as 1% and as high as 16%. And everyone who got those mortgages were happy. So,
I think we were somewhere around 7% back then.
Probably.
Yeah. Where are you? It looks like you're in the woods or something. What's going on? You got a hearth behind you? Like, this isn't a DC property, Lou. What's going on here?
This is what you can get out in Lost River, West Virginia. We're going to talk about second homes in a little bit.
Oh, all right. Well, let's dive into mortgage insurance first. I have a lot of clients come through and they don't really understand mortgage insurance. So I give the real quick spiel that usually says, hey, you got to put down 20% or you're going to pay mortgage insurance. Sometimes there's going to be a program that has no MI being mortgage insurance. But you want to speak a little bit about that and try to make it a little bit better explained than what I do?
Yeah, it can get very technical. So let me just give you the down low.
Right. I mean, go for it.
Normally, yes, people who put down less than 20% require mortgage insurance on their loan. Basically, the way it works is this. The lender and the borrower are about equal in risk if you put down 20%. If you want to put down less than 20%, that's fine, but you have to insure against that risk. And the insurance is bought by the lender and is charged to you. So the less you put down, the higher the mortgage insurance generally is. So mortgage insurance is great because it allows you to buy a home with less than 20% down. However, it can be pricey, but not all mortgage insurance is the same. So the only message I have that's really important right now, not what mortgage insurance rates are, whether tax deductible and all that. The important thing to know is that mortgage insurance varies depending on your credit score and how much you put down. So it could be as little as 0.25%, and it could be as high as 2.5% or more. And you're not going to know that unless you talk to me, talk to another lender in the pre-approval process. You'll find out what that is. The second important thing to know is that you never have to pay mortgage insurance. The alternative is for the lender to pay the mortgage insurance, and then you pay it in the form of a rate. So for a slightly higher rate, you don't have the mortgage insurance payment. And there's advantages to that and disadvantages to that. But the biggest advantage is it's tax deductible and the payment is lower. So there's any loan that you get from me or from McLean that has mortgage insurance required, we can eliminate that payment as part of the rate.
Okay, so anytime that there's a product that someone says there's no mortgage insurance and you only have to put down 10%, it's basically a higher rate so that the lender pays the mortgage insurance.
There's some exceptions to that.
Okay.
In the jumbo area, we have a loan, it's 10% down, no mortgage insurance, 15% down, no mortgage insurance. So that's truly no mortgage insurance.
It's truly no. Okay. Well.
But for most people who are buying, most of your viewers who are looking at a first-time home buyer situation, they're going to be looking at mortgage insurance if they don't have 20% down.
Okay. So what happens, say I put down 10% and I pay that for a few years. Does mortgage insurance automatically go away, or do you have to call the bank and it goes away at that point, or do you have to refinance? Like, what happens with that?
Yeah, that's a great question. So mortgage insurance will automatically cancel, will go away at a certain point in the loan. And once you get to that point, by paying the monthly payments over time, it will just automatically disappear. Now, if you pay extra on your loan, or if your property value increases faster than normal, then you can ask to have it removed if you have a certain amount of equity. But you have to pay on it for a couple of years, otherwise, it's not going to go away overnight.
Okay, well, that's good to know. Let's go into second home financing, since you have this really cool fire going on behind you and nice hearth, and you said it's snowing outside in West Virginia. So I always tell my clients that if they want to get a second home, that it has to be 50 miles or more away for it to qualify as a second home. And then I also say you probably need to put down 20%. How wrong am I?
You are totally wrong.
Okay. That's what I figured. So that's why you're here, Lou.
No, so you're not totally wrong. Let me take it back. Some lenders do require that, and it's going to depend on the lender. Generally, though, there's not a specific rule. So, we at McLean will allow you to buy a second home anywhere as long as it makes sense, as long as you're not going to rent it out. So I've made second homes purchases for somebody, a couple maybe lives in Bethesda and they want a condo downtown. That's a second home. If you live in DC and want a home out here in Lost River, that's a second home. If you want a home in Delaware, obviously that's a second home. As long as you don't intend to rent it, it's a second home. And you can have more than one second home. You can have 3 second homes.
Didn't know that either. All right. So there's no down payment restriction? Like
The down payment requirement is 10%.
It's 10%. Okay.
As opposed to 5% if you were buying it as a primary residence.
Okay, then us two can buy in Lost River, West Virginia.
Let me give you an example of how I bought this house and how I financed many houses out here.
Do you want to do that?
What?
Give me the example, Lou.
I'll give you hypothetical. Let me give you a hypothetical.
Okay.
So you own a home in DC. Obviously, to buy a second home, you own a home. And so most of us in DC who own a home have some good equity in your home from appreciation, right? So say you have a condo, $700,000, and you owe $500. You can take a home equity line of credit on your condo in DC, say $50,000, and you can use it for a 20% down payment on a $250,000 house out here. So effectively, you're financing 100%. You're just splitting it between the two properties. So we do that all the time, because even 10% or 20% on a purchase, if you already have your house, you don't often have, $25,000 or $50,000 sitting around.
Right. That's what I was thinking.
Equity. You get plenty of equity. So use your equity in a second home.
That's a good one.
If you're tired of being in the city all the time on the weekend.
I like that. We're going to go into new tax laws and how it's affecting financing, but we have a question. So let's just jump to this question real quick. It's a hard question, Lou. I don't know. It's hard for you. What are the max capital gains for a married couple now with the new tax laws? Did that change?
That's a great question. No, it did not change.
Okay, good.
It did not change. It's $500,000 for a couple to exclude the gain. So there was a lot of talk about this one, and so it's good to bring this one up first. There was some talk about eliminating that altogether or making it more restricted, but It's still the same. So if you own your home and live in it for any 2 out of the preceding 5 years. So if you lived in it 3 years ago, but then rented it out for 3 years and you sell it, you can exclude the gain, right? So if you lived in it, if it was a rental and you moved back into it for 2 years, then you can exclude the gain. So it's a huge benefit to ownership that did not change with the current tax law.
Yeah, National Association of Realtors lobbied really hard on this. I think that they were trying to do it. Were they trying to make it 2 out of the last 8 years? I don't remember what.
3 out of 8.
3 out of 8.
It's be 3 out.
And 8's a long time, considering a lot of people in the DC area are moving every 5 years.
Yeah, it's a huge plus for the real estate market.
Thanks, Ashley. Keep the questions coming. Let's jump over to the new tax laws. It's real confusing. People are always asking questions, and let's just start by saying we're not accountants, so you should probably always ask your accountant. But we're here to help you attempt to understand this complex bunch of what started to be more garbage than it ended up. Lou, what do you got for us?
Yeah, so again, I'm not an accountant, and so I'm not going to give tax advice, but I do have a great accountant, and he keeps me up on all the details. Essentially, all the talk about all the changes that were going on, they're really, for most people, nothing changed. Mortgage interest is still tax deductible for your first mortgage, your second mortgage, and mortgage on a second home. Okay, now except for the cap is now $750,000. So we're in a high-cost area, and frequently people have more than $750,000 in mortgage debt. That doesn't mean if you have $751,000 that you can't write off your mortgage. You can just write off the first $750,000 worth of interest on $750,000, right? So 95% of all Americans, 96% of all Americans have loan balances below $750,000. And in our area, still most people have loan balances below $750,000.
Yeah, a lot of people don't understand that part.
Yeah,
sure.
And again, if you have $1 million mortgage, or an $800,000 mortgage, it's not that you can't write it off at all. You just can write off majority of it, $750,000 worth of interest. And also the other thing on that is that what went along with that, the other big conversation was around state and local taxes. So that's a big one, and it still hasn't been completely sorted out. But you can write off. You own a home. I own a home. I write off the interest that I pay on the loan plus the property taxes, right? So there's a limit now on the property taxes up to $10,000. Well, DC is relatively high property taxes, as is Northern Virginia, but not many people pay $10,000 a year in taxes.
Right.
So it doesn't affect most people, right?
That's good to know.
Yeah.
Thanks for explaining a little bit about that. Let's take some more questions in just a second. But in the meantime, do you have any favorite products that you have right now that you like to put out there? Something that other banks might not have.
Yeah, I have a great one. And over the last couple of weeks, you've had some great guests talking about first-time buyer programs and all that. Those are always great. But I was just talking to a referral source this morning, and he was asking me about an asset depletion program. Without getting too technical, say you have, I know you had a call or a question the other day about retired people with assets. So I'm doing a couple loans right now for folks that are retired, government employees who are retired. They have lots of assets, but no income hardly because they're on Social Security or a pension. And for somebody like that who wants to buy a new home or trade up their home, they don't have the income to qualify. So we can use their assets as income, right? So somebody who has a lot of assets, typically retirement assets or other investments, we will convert those using an equation into income and allow them to qualify without selling their real estate, without liquidating their investments.
That's a good one. I think I actually think that was my mother-in-law that asked that question.
I think it was, yeah.
I think it was, right?
Give her my card, Mark.
I'll give her your card. Let's get her in a house and make it not my basement. Oh, is she on? I can't see who's watching. Hi, Mom. We have a question from Erica. Let's see. Hello, Erica. Wanted to ask about locking in rates and your recommendation for someone who wants to buy in Northern Virginia this spring. Is it worth locking in?
You can lock in a rate without finding a home. That would be great, but we don't do that. So you have to find a home, and as soon as you have you don't have to have the contract fully ratified, but as soon as you've found the home that you're going to ratify the contract on, we can lock in the rate. Now, you can lock in a rate for as long as 90, 120 days. Normally it's 60 to 90 days. And then during that time, at McLean, we have a program that if the rates go down during that time, we'll give you the lower rate. But locking in the rate as soon as you can in this environment is very important. Don't try to game it and think, well, I think rates are going to go down, or I'm going to wait to buy a house until rates go down, because you could just watch those rates disappear far into the rearview mirror. But if you lock in a rate today and your settlement isn't for another 45 or 60 days and rates go back down a little bit, we'll give you a lower rate.
And I think that was the other question that maybe Erica was wondering, is if the rates go down, do they get the lower rate?
Yeah, so we have a program at McLean called Rate Flex. It's no cost to you, and you get an option one time to lower the rate during the period of time that we're processing your loan. So it's normal when rates move like they have over the last few weeks very quickly up, there's oftentimes a dip back down. So it's important that you don't wait, because rates today, may be 4.25%, and in 6 months they may be 4.75%, or even somewhere like that. But they may be 4.25% today, and they may be 4.125% tomorrow.
Yeah.
And so you want to be able to have the option to lower the rate. We have that program available. The important thing is not to wait and think that rates are going to go down.
Agreed, especially right now. Oh, and she apparently is on. Hello, Ma. Ma has been looking for houses on the side. What are the FHA loan limits in Northern Virginia? I need to get out of Mark's basement. She does not, just for the record, she does not live in my basement. She is a nanny over in Alexandria for some ER doctors, and she lives in a lovely, expansive home that I did sell them. What are the limits in Northern Virginia?
79 in Northern Virginia, as long as it's not, if you go too far out, it's not 679 anymore. But also Northern Virginia is 679,000.
It is. Okay, great. Nice. Erica says, thank you, Lou. Okay. All right. Well, I think that does it for us. That puts us just under the 20-minute mark, which we tried to keep each time. Thank you so much for coming on, Lou. It's nice to see you in this capacity.
Always a pleasure.
Enjoy your winter wonderland out there in West Virginia. I'm Mark Rutstein with DCRealEstate.com, the Evan and Mark team right here at Compass. Thanks for joining us, and feel free to ask more questions in the comments. I'll have Lou's contact information in the comments below so that you can send him a message, and we'll keep an eye on the comments and reach out to you and send you direct messages as needed. Happy Friday, everybody, and see you next Friday at 11:30.